acqui-hires or small M&As, which are essentially companies which are struggling to raise capital, trying to build out their trajectory, and therefore somebody swoops in and sees that they can get this for a bargain. So the first of those is Biryani by Kilo. For anybody who's eaten, loves biryani, I think you might have tasted the brands. And Devyani, the name might sound innocuous and maybe people don't know, but they are the powerhouse behind bringing some of the quick service restaurants into the country, like KFC and Pizza Hut. We saw Minimalist in the prior edition being picked up by HUL. When it comes to retail brands, D2C, food, these kind of category buys, I think anybody who builds a reasonably interesting multi-city, category and a brand is eventually going to get an outcome. How big or small is a function of how well they built it and how large they built it. We believe M&As, are a good engine to keep recycling great talent, great products, value back to the investors who invested in these companies. But fundamentally, they're not all equally impactful or equally sized, as one may guess from reading the headlines in the newspapers. Broadly, we try to categorize them into two buckets. One is acqui-hires or small M&As, which are essentially companies which are struggling to raise capital, trying to build out their trajectory, and therefore somebody swoops in and sees that they can get this for a bargain. Eventually, there is value created, right? There's a talent pool that's been built, there's a product that's been built, and somebody sees value in that, but they're not going to pay an arm and a leg for it. And usually, the situations are not happy situations where the company is running out of money. So, here we want, in this April edition of the recap, as we looked at all the transactions, we saw 2-3 names like this. Clevertap buying Rehook.ai. Most of these amounts are usually undisclosed, and basically, at least the headline suggested that Clevertap is looking to buy new capabilities in AI-driven promotions and customer retention, which is what Rehook was building. And then usually the plan is either the tech and the team integrates into the Clevertap platform and allows them to service their customers better. Similarly, Creative Fuel supposedly bought Miss Malini Entertainment, the content platforms and influencer network that Miss Malini has been building as a firm can be integrated into Creative Fuel's operations, and then they build a little bit more strength in the digital marketing space. These are the two we heard. And then we also heard of a slightly larger acquisition in the two-wheeler electric vehicle space. And if people have ever driven by one of those EV distributor shops in small towns and large towns, you just see literally dozens of brands. So this was inevitable that this is not going to be the first you're going to hear. I think there are going to be a lot more consolidations in this space. So Remsons Industries bought Astro Motors, bought a majority stake. At least the paper suggests that they bought 51%, which means they want control, but they really don't want to run the business yet. And Remsons doesn't seem to have had a play in that. And so they're getting into buying into, actually, this is actually in the three-wheeler space. So sorry about that. But basically, three-wheelers are now becoming the mainstay of both cargo and passenger transport intracity. And it seems like a gap in the Remsons portfolio, which they're essentially acquiring to fill with this acquisition of Astro Motors. So that's a quick wrap on, what we think is the small ticket acqui-hire sort of M&A pool in April. Now we should move to the more meaningful, chunkier acquisitions, either which affect some large companies in the tech space or were sizable in terms of the acquisition value. So we're going to touch 4 companies today. Perfios buying IHX, Devyani International buying Biryani by Kilo, Accenture acquiring TalentSprint, and the Jaipuria Group acquiring ClearDekho. So interesting, 2 in retail and 2 in tech. And so clearly consumer brands and retail are able to demonstrate that if you build a certain size of business, there are enough potential buyers. So the first of those is Biryani by Kilo. For anybody who's eaten, loves biryani, I think you might have tasted the brand. And Devyani, the name might sound innocuous and maybe people don't know, but they are the powerhouse behind bringing some of the quick service restaurants into the country, like KFC and Pizza Hut. So they're not new to this business. Doubly so when somebody has a portfolio of such brands, they're adding a desi fast food category to their portfolio. So not surprising at all. And also in the future, when these operational expansions happen, not uncommon to see somebody who owns a portfolio of food brands align all their food brands together, centralize cloud kitchens. It's up to Devyani and how they milk the synergies. But this was over a 400 crore purchase for 88% of the company. So I'm guessing the investors in this elevation, etc., got a good exit, and the founders probably have some upside with the residual stake. That's how most of these acquisitions work. And then if you look at ClearDekho, which is obviously trying to be a competitor to the burgeoning mass market eyewear market, which Lenskart is the undisputed leader in, there is room to go to small towns and smaller cities. ClearDekho seems to have had a play in that space. And again, 100 odd stores, 60 plus cities. The target is, I think, to grow that to about a 300 crore top line, as per what we've seen in the press, and aggressively expand this store footprint. And the Jaipuria group is quite legendary in their retail experience and distribution. So clearly, they want to get into some of these faster moving, these areas like eyewear, and this is supposedly 100% acquisition. So clearly, they believe that this is a category which they can grow on their own and they can build profitably. So I think, we saw Minimalist in the prior edition being picked up by HUL. When it comes to retail brands, D2C, food, these kind of category buys, I think anybody who builds a reasonably interesting multi-city, category and a brand is eventually going to get an outcome. How big or small is a function of how well they built it and how large they built it. And the big houses can't build these brands cheaply. They're somehow better built with a nimble entrepreneur with venture capital, and then much easier to add into the portfolio of a very large conglomerate. The other two, Perfios and Accenture, is of course, a global giant, whereas Perfios is more in the identity space, actually competes with one of our portfolio companies called ID5. And Perfios' strategy for the last 3-4 years has been grow inorganically and rapidly through an acquisition. It shows that certain companies are built with a muscle to grow through acquisitions. It's a very natural muscle. Funnily enough, just this morning, just as I was recording this, the headline somewhere, I think either on X.com or on LinkedIn, there was a headline which said, venture capital is not venture capital anymore. It's actually following the private equity playbook. So even the VCs are funding models that are roll-up oriented, which was unprecedented. Venture capitalists never did that. But funds like General Catalyst and Andreessen and the West Coast have multi-billion dollar single funds. The key is to think about it as a single fund. So the AUMs are growing, but they're managing very large funds for a 2-3 year cycle. And so usually when they're deploying that kind of capital, and if you want to put in hundreds of millions of dollars, you're not likely to put it into a venture bet. You're likely to put it into a private equity bet, which rolls up assets. Perfios, to me, has been a good example of that in the Indian context. They now picked up a company called IHX, which is basically into health data insights. And since they want to strengthen themselves, strengthen their product offerings in BFSI, this will allow them to actually expand their product profile in health insurance claims, that entire ecosystem. So that's kind of, it's a third acquisition in 25 by Perfios, by the way. So it validates what I just said. The other one, Accenture buying TalentSprint, here we seem to have a number, unlike in the Perfios case. 100% acquisition for about 245 crores. It strengthens this LearnVantage capabilities in university certifications and deep tech boot camps. So basically, it combines Accenture's global reach with TalentSprint having academic and tech partnerships, and they're basically buying a team of 210. They're buying in to a new segment that they can sell into, and essentially they're trying to reshape the workforce to be ready for an AI-powered world. So they will probably repurpose most of the coursework and their capability in university certifications and deep tech boot camps to an AI first offering, and they hope that their customers are all dying to sort of reskill their technology workforce to AI first skills. And that seems to be the motivation. Clearly, just full disclosure, these are an armchair observer set of views on what we read in the papers. We have no insight into both the buyer and seller's mindset because they're not our portfolio companies. Hopefully, in the editions to come, there will be Blume portfolio companies, and there we will give you the insider dope because we know what prompted a certain in this case M&A, or in the future if we do a secondary segment, we can tell you what happened. But it's very difficult to know more than what's in the papers. But we're trying to break this down for you. I hope you enjoyed the April edition of our M&A breakdown. And given how much momentum is being built in the Indian tech ecosystem, I think we'll have a steady pipeline of interesting stories coming every month. So keep looking out for more. And we've just decided to convert this from a quarterly update to a monthly update, just given there's so much to cover every month. So yeah, hope you enjoyed this.